Hello guys, I'm Paris, the options guy, and welcome to the Novius Trading Podcast. This is episode number 23, and I hope you guys are doing great. I hope you guys had a great Diwali in this previous week. But today we're gonna talk about some very interesting things, like what happened with the US elections and the interest rate decision that the Fed took in this week. And then we are also gonna talk about what are the major events that are coming in our markets next week, because there is one major event, and that is the CPI data. And I'm gonna tell you why this will be a very important CPI data that is going to come in in the US in the next week. And then we are also going to talk about the two new IPOs that are coming in the Indian markets next week, and should you apply to them or not. And then in the end, I'm also going to talk about how the markets can move, because markets have been a bit frustrating, at least for me. But anyways, we are going to talk about all of that in the coming few minutes, or in this episode, in today's episode. But yeah, without any further delay, let's just start with the episode. Now, first, let's talk about what happened in the markets in the previous week, starting off with the US elections. And as you might have already known, if you don't live under a rock, is that Donald Trump won the elections, and that was actually a very good victory. And markets exactly moved like we had discussed in the previous week's episode. Stocks were up, crypto was up, and gold was down. Gold was down 3% in a single day, as well as commodities also. Now, what I didn't talk about, and I realized that afterwards, is bonds. And bonds were also down. That means bond yields were up on that day. Why was that the case? Is very simple, because people started to go into risk on mode. And what risk on mode is that people started to invest into risky assets like stocks and crypto, because as I said, that Trump administration is bullish, not bullish, but it makes policies which are good for these asset classes, that is stocks and cryptos. So people started shifting their money from gold as well as bonds and started to invest that in stocks and crypto, because of which you saw bullishness in stocks and crypto and bearishness in gold and also bonds. And by bearishness in bonds, I mean that bond yields were up. Why are bond yields up? Because bond prices fall down. And if you don't understand how bond yield and bond prices and all of that stuff works, I will link an article down below that I wrote of, I think, a month or two ago, which clearly explains to you how bond yields and bond prices work and how they are correlated. Okay, so definitely check out the article. I will link that in the description. But anyways, after that, if we see, on Thursday, there was the Fed interest rate decision, and the Fed cut rates by 25 basis points, which was also expected. And nothing really important coming out of, after the Fed interest rate decision. In the summary of the interest rate decision, also, there was nothing really which was that important. Everything basically was already something that the Fed officials or Jerome Powell has already said in the past, and they still remain confident that inflation will come under 2%. But I have a feeling that will not be the case, because they were also confident in 2021 that inflation was transitory, and then inflation went and hit 9%. So you be the judge of, will inflation go under 2%, or will inflation continue to rise in the coming few months? I feel like inflation will continue to rise in the coming few months, but still, we will not try to predict so much. We will only try to react to what is happening in the markets. And I'm sorry. Other than that, I don't think there was anything which was really important. I read the Fed minutes, you can say the minutes or anything, but the summary, and I didn't feel like anything important that should be shared with all of you guys. So yeah, that was it for what happened in the previous week. This previous week was crazy in terms of the volatility in the market, but still, it was not as crazy as things can get when when elections of the biggest economy of the world is going on. But still, it was a fun week for me in terms of trading forex market, because I've started trading forex but not so much. So I was just like testing things out, and it was a fun week anyway. But yeah, anyways, that is not the topic of this podcast. But yes, maybe I'll talk about forex in the coming few episodes, forex trading and all that stuff, especially given that options trading is now not as good as it used to be in India. Anyways, let's move on to what is going to happen in the next week without any further delay. Now, talking about what is going to happen in the next week, we have some few interesting important data points that you should definitely look forward to in the next week. Starting off with Tuesday, where we have the India's CPI data. Now, I don't generally talk about India's CPI data, but I think this time it is important because what RBI has said in the previous meeting is that they will not cut rates until and unless inflation cools down, right? So if you see, Fed has already cut rates 2 times with a big 50 basis point cut, but RBI has not started to cut rates as of now. So I'm talking about India CPI data is because why I'm talking about India CPI data is because if India CPI data comes out better than expected this time around, I think we might see a rate cut in the coming RBI meeting. But still, India CPI data coming out on Tuesday, it will come out at 4 p.m. That is after market, and expectations are that CPI data will come out at 5.8%. If we get a big surprise like CPI data coming out below 5.5% or anything, right? Just a very good deviation from what is expected, a positive deviation from what is expected, I think we can expect that the Fed will start to cut rates. And what this can do is that it can put a little bit of short-term positivity in the market. So definitely keep that in mind. On Tuesday we have the CPI data, okay, India CPI data. Again, if the data comes out basically as expected, almost close to what is expected, then it won't really matter, this data won't really matter. But yeah, that is it for India CPI data. And then on Wednesday, the next day, we have the US CPI data, okay, and this is going to be a very important CPI data. Now I'm going to tell you why this is going to be a very important CPI data. Now if you see, the US Fed has started to cut interest rates at a time where CPI data has still not reached their target of 2%. They are saying that CPI data will definitely come down, right? It will slowly come down to 2%. And so, we don't really need to worry and we can start cutting rates. Now, if the CPI data even remains flat, that is, it does not go down, or even if it does not go up, even if it remains flat, that will be a negative for the market, because that is indicating that, and that Fed said that, is inflation will continue to come down, but inflation is not coming down. And at this time, the Fed has cut rates. So this will be a negative for the market, because markets will finally start to realize that there could be a very real possibility that inflation might flare up again from here, and we could again see a round of inflation coming in the markets. And that definitely does not go well, as you must have seen from the correction that happened after the inflation went to 9%, right? So yes, CPI data expectations are that it will come out at 2.5%. Some sources are expecting 2.4% itself. That is as much as what came out in previous month. But still, expectations are 2.5, 2.4% in that range itself. So what markets will only react positively to this data if the CPI data comes out below 2.4%. If that happens, only then the markets will react positively, or else the markets will react negatively. Keep this in mind. On a month over month, expectations are that CPI data will come out at 0.2%. So again, if it comes below 0.2%, good thing. If it comes above 0.2%, bad thing for the markets. And then core CPI on a month over month basis, expectations are that it will come out at 0.3%. Now, just keep this in mind, okay? 0.3% core CPI, okay? If you annualize that number, right? By annualize, I mean just multiply it by 12, because this is a month over month number, right? 0.3% increment on a month over month basis. So if you want a year over year increment, you just have to multiply it by 12. And if you multiply 0.3 by 12, that comes out at 3.6%. So even if on an annualized basis or on a month over month basis, core CPI is coming out at 0.3%, that means on an annualized basis, we're still seeing core CPI at 3.6%. How is that even close to the Fed's target of 2%, right? Okay, leave 2%, 2.5%, 3%, right? That is still much higher than 3% also. So it just does not make sense why Fed would cut rates, because the GDP is strong. The GDP numbers came out pretty good in the last week. It's not last week, but a week before that. And if you see the job market, that is weakening a little bit, but there is no sort of a severe weakness in the job market. So why did Fed cut rates, right? And if inflation starts to move, that will definitely be a bummer for the market, because you have to understand that the markets are at an all-time high. That means the long positions in the market, the bullish positions in the market are also on the higher side as compared to the bearish positions. So if a sell-off starts to trigger from here because of CPI, because of any reason, that will be a very sharp sell-off. Keep this in mind, and that's why I've also been telling you guys to not invest right now. I've told this in the past few episodes that this is not the right time or the right place to invest in the markets. We are already seeing some effects in Indian markets over here, but yeah, even aside from that, if you see, um, just the fact that the Fed is cutting rates when CPI is still high, especially core CPI, super core CPI. If you see, go and search super core inflation, you will see that super core inflation is going up. So it really does not make sense why the Fed would cut rates at this time, and that too, with starting off with a 50 basis point cut in September. That could be really a big mistake, and I talked about that in the previous few episodes of the podcast. But yeah, core CPI, as I said, that's still very high core CPI also. So only if these numbers come out lower than what has come out in the last month, only then the markets will react positively, or else the markets will react negatively. Even I think even if they come out just flat, markets will definitely react negatively to these numbers. Okay, but yes, after that on Thursday we have the PPI data. Now CPI is consumer price inflation, PPI is producers price inflation, which you can say sort of wholesale inflation. Okay, not completely like you can say correlated, but yes, you can say wholesale inflation in the US. Okay, expectations are 1.8%. No, expectations are actually, I don't know what the expectations are, because I could not find any consensus on the PPI data as of now. So I'm sorry, as of now I don't know what the expectations are. You can definitely search it once we are closer to the date closer to Thursday. You will definitely get a few expectations in on the internet. But yes, as of now I don't have the expectations, but previous PPI reading was at 1.8%. So same thing with CPI also. If it comes out lower than expected, markets will react positively, or else the markets very well, I think, will react negatively to the PPI data also. Okay, and then on Friday our Indian markets are closed. Keep that in mind, on the account of Guru Nanak Jayanti. So anybody who celebrates Guru Nanak Jayanti, good for you. And I hope you have a great day on Friday. But yes, on Friday we have the US retail sales data also, and previously the US retail sales data came out at 0.4%. Now if the retail sales data come out lower than expected, that will be good for the markets. Why? Because then the Fed's rate cuts can be justified, and then the markets might take the rate cuts a bit more positively than they already have. Okay, so that is why previously retail sales came out at 0.4%. If they come out below that or below the expectations, then definitely markets will react positively. If they come out higher than expectations, market will react negatively. Now this is a bit of a contrary thing that you might not have expected, that how can that be possible? If retail sales are higher than expectations, doesn't that mean that GDP is great? Yes, GDP is definitely great. GDP is definitely doing great. The economy is doing great. The retailer is definitely doing great. But you have to understand that if it comes out higher than expected, that means the GDP was already strong, and the Fed cut rates in a strong, you can say, GDP, or in a strong economy, which I think again you can say it can put a bit of a worry in the markets, especially because of the fact that inflation can start to rise up again. In my opinion, this can very well be a good possibility that inflation starts to rise up again. But as I said, that let's not go too much in the future. Let's see what the data is telling us. But yes, that was it for what is going to happen in the next week. Now let's move on to the IPOs that are coming in our markets, and should you apply to those IPOs or not. Now talking about the two IPOs that are coming in our markets next week. First of all, we have the niva bupa Health Insurance Limited company, and we are going to talk about that now. So if you see, niva bupa Health Insurance Company is launching a 2200 crore IPO. Now this is a pretty established player in the health insurance industry of India. Niva bupa, if you would have heard about it, if you would have ever gone to take a health insurance, if you would have ever cared about your health. But anyways, the company is launching. Actually, the IPO has already started on 7th November, that is Thursday, and it is going to last till 11th November, that is Monday of this week. So you still have one more day to apply, so you can definitely apply. And the IPO is of 2,200 crores, out of which 800 crores will go to the company, and the rest 1400 crores will go to the promoters of the company who are selling their shares. So should you apply to this IPO for listing gains? The answer is, well, no, because we don't actually know what the listing gains are going to be. This sometimes happens because there are no shares in the gray market which you can look at, which are being traded. So that is the reason why there is no gray market, you can say, indication as to how well the IPO will get listed. So in my opinion, you should definitely not take the risk of still applying to get any sort of a listing in. Maybe it might also get listed in a discount, right? But now let's talk about, should you apply to this IPO in terms of um, investing in the company. Should you apply to this IPO on a fundamental basis? And the answer to that is, first of all, let's look at how the company has been doing in terms of revenues and profit. Okay, so if you see over here, revenues have been growing pretty well. If you see over here, in FY22 revenues were 1884 crores. In FY23 revenues were 2850 crores, so very good jump. And in FY24 revenues then again jumped to 4118 crores. So revenue is rising very well. And at the same time, if you see, profit after tax, net profit also jumping very good. In FY22 196 crores of loss, but in FY23 if you see, 12 crores of profit, and in FY24 81 crores of profit. Now if you see over here, what you will see is that in the first half of a financial year, the business is actually a pretty slow. But in the second half of the financial year is when the insurance companies start to see good business coming in, because a lot of people opt for insurance because of the tax benefit near the end of the year, when the financial year is about to come to an end, and then they have to calculate their income tax and all that stuff. So that is the reason why in the second half of the year is where you see a good uptick or a strong business coming in the insurance sector. Okay, so if you can say, the revenues or the whole financials of the company are good enough. I would not say they are very good, because if you see, at the end of the day, the net profit margin is pretty small, very small actually, because if you see, net profit margin at just 2%, right? So 2% net profit margin is not very good. At least it should be 5 to 6%, if you're looking at something like an insurance sector company. I mean, it should be even more than that, but I'm just saying, like, bare minimum at least 5 to 6%, no, right? So as of now, the net profit margins are very low, but that can also improve very fast in the coming couple of years, because sometimes when a company goes to being net profitable, its net profit rises much on a much faster pace as compared to its revenues. Okay, so definitely the profit after tax of the company, or the net profit of the company, can definitely rise in the coming few months, but still I would say not that good of financials, but still good enough. So one more thing is that it is one of the fastest growing companies, health insurance companies in India. Okay, and the issue is a bit, the pricing of the IPO is a bit aggressive in my opinion, even given the fact that these guys are growing at a very good pace. I would say still, the pricing is a bit on the higher side of the spectrum over here, if you talk about the PE ratio or anything. definitely the IPO is a bit more expensive. So should you apply to this IPO? So if you have a very big portfolio, then you can definitely give this company a small part of your portfolio. Okay, so let's say if you're 10, 12 lakhs, 15 lakhs of portfolio, then definitely apply for 1 or 2 lots. But don't give this IPO a very big part of your portfolio, or this company a very big part of your portfolio, because if markets continue to correct from here, definitely this company is on the higher side of the spectrum in terms of valuations, right? So the valuation of this company will also come down, which means the stock price of the company will also come down. So if you definitely have to invest, or if you really want to invest in this company, I would say don't invest in the IPO. If, again, as I said, if you have a small portfolio, then don't invest in the IPO. But if you have a big portfolio, then for the long term you can definitely invest in the company. But as I said, you will no, I didn't say that, but yeah, you will take a little bit more time to see the returns coming from this investment of yours. But anyways, if you really want to invest, I would say wait for the IPO to get listed and wait for a bit of correction, because again, as I said, that markets most probably should continue to correct from here, and chances are that this company will also continue to see a bit of correction after getting listed. So then you can, if you get the chance, invest near 55 to 50 rupees. That will be a very good deal for you, and I think at that price this company is a good deal to invest into for the long term. Now if you want a bit more established player, then you should look at Star Health and Allied Insurance. Okay, this is already a listed company, and that is also a very good company in my opinion, that you should look forward to if you want to apply in the insurance sector. But if you want to play in the insurance sector, I think the best company to invest in is PB Fintech. Really, one of the most favorite companies of mine, and you might say that I have a bias for that company, but no, the best company to invest if you want to play in the insurance sector is PB Fintech. Why? Because companies like Niva, Bupa, or Star Health, they are competing with each other, right? They are competing with each other, and their net profit margins are being affected, or you can say any sort of costs are being affected, profitability. But PB Fintech is on the top of them all, right? You sell any company which sells insurance on their platform, PB Fintech will get a cut out of it, right? So and again, they have pretty much a monopoly on the whole online marketplace of insurance, right? So if you want to play for the insurance sector, even be it any sort of insurance, health insurance, motor insurance, life insurance, fire insurance, any sort of insurance, right? I think PB Fintech is the best play for you if you want to invest in the insurance sector. Now again, PB Fintech also at this point of time is a bit expensive, is going on a bit of an expensive side of things. So definitely wait for a bit of correction and then invest. So that is out of the way. Now let's talk about the other IPO, that is Zinka Logistics. Now this IPO, this company Zinka Logistics actually has their app which is known as Blackbuck. This is a digital, you can say, digital trucking platform. Okay, a platform for truck operators, basically you can say a digital platform for truck operators. Now we are going to come to that, but should you apply to this IPO in terms of for listing gains? The answer as of now is no, because listing gain, the gray market premium as of now is just going on at 3%. Not worth it at all. Please don't run for 3% gains, because the IPO might open down 7-6% and you will lose a lot of money just to get those 3% gains. Okay, so don't apply to this IPO for listing gains. If by magic somehow the listing gains pump up to 40% or above, then definitely think about investing. But other than that, don't invest in this IPO for listing gains. But in terms of fundamentals, should you apply to this IPO? Now let's look at that. So the company is raising 1114 crores, out of which 550 crores will go to the company and 564 crores will go to the promoters of the company who are selling their shares. Not bad at all. So the IPO will open on November 13th and will go until November 18th, which is a bit strange, right? Because if you see, IPOs are open for 3 days, right? 3 working days, right? But this IPO is open for 4 working days, which is, again, as I said, a bit interesting, because I've never seen an IPO being open for 4 working days. Anyways, good thing only. So as I said, that this company operates a digital platform for truck operators, right? And 963,345 truck operators as of FY24 are on this platform, which is 27.5% of all truck operators in India. So a very good feat by the company, and that is the reason why this is the largest digital platform for truck operators in India. So this company it does not really have a lot of competition also, which is similar to this, right? So basically you can say pretty much like close to being a monopoly. This company close to, you can say it is close to being a monopoly in the digital truck platform in India. Definitely this is one of the very good things, because I really like companies which have a monopoly on their business or close to a monopoly in their industry. Okay. And again, one more thing is that they also do more things, like they, as I said, that they are a digital platform for truck operators. So they do a lot of things, right? They have payment solutions, they have telematics. I don't know what that is, to be very honest. And they have a freight marketplace. Now, what is a freight marketplace? Is that if, let's say, I want to ship something via trucks, right, via road transport, right? Let's say I want to ship something in another state. So I can go to their app, and I can list that I want to ship this thing to this to this, you can say, another state, right? And some other all these you can say other truck drivers or truck operators, they can contact me via the app, they can find me via this app, and we can, sort of fix a deal. So you get my point, right? This is a marketplace where truck operators and shippers people who want to ship their stuff can meet at a place, right? And then they also have vehicle financing services. So this is a bit of a good thing also, because they've diversified a little into financing also. So that is a good thing. So the business model, very good in my opinion. This is a very unique business model, and it might take a good amount of time for someone to disrupt it. So that is one of the things that I think is really a good thing about this company. Now, one thing that you might not like is that the company is still not making a profit, and we'll come to that. But let's just start with how the financials of the company are. So if we see in FY22, revenues were at 156 crores. FY23 revenues jumped to 195 crores, and in FY24 revenues jumped to 364 crores. Okay, at the same time, FY22 net loss was 284 crores, FY23 290 crores net loss, and in FY24 193 crores. Now, one of the good things that I looked at is that in first quarter of FY25 they actually made a profit of 30 crores. So they are moving clearly towards profitability as of now. So should you apply to this IPO? In my opinion, for the long term, it is a very good IPO. It is you can say slightly on the higher side of earnings in terms of like how much they are charging for the IPO, but still it's not bad at all. Because why am I saying it's not bad at all is that the way these guys are growing and the business these guys have, I think that is worth it. And so they have a PE of 37. They will have a PE of 37 post IPO, right? So it is a bit slightly on the higher side, given that these guys are not making very good profits as of now, but still, in my opinion, a good enough company to invest in. So should you invest in this company? Yes. In the short term, you might see a little bit of pain, because if you see most of the companies which get listed, which have negative earnings, which have negative you can say which have a net loss, they tend to correct a little bit after the IPO, and then they start to move up. So should you apply to this company? I think definitely yes, but in the short term you might get a little bit of pain. So if you're not ready to handle a pain, which again you should be if you want to invest for the long term, short term pain is definitely a given. But still, if you feel like you want to wait a little bit, definitely you can wait a little bit. Things might the shares of this company definitely might correct a little bit, and then you can think about buying these shares, maybe 15-20% down below the IPO, or maybe just 10% below the IPO price, because IPO price is at 273 rupees. So maybe after getting listed, after a few days you see that the stock is down 10-15%, then you want to pick that up, definitely a good deal in my opinion. So you should definitely pick this IPO up. If you get a dip after the IPO is listed, after the company is listed, even then a very good deal to invest in for the long term. Definitely this company can be a very good in my opinion, you can say a very good performer, given the fact that the whole logistics sector in India is at a very good pace of growth, right? So that is again a plus for this company, because again, if logistics grows, road transport grows. If that happens, that means more trucks are running, more truck operators are running. If more truck operators are running, that means business will definitely come to this company also. So for the long term, definitely a very good IPO. You can apply it on the IPO, you can apply to the IPO itself, or you can buy the shares after the company gets listed on the exchanges. Okay, so that was it for the IPOs of this week. Now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Bank Nifty continuously, just staying in a range over here, right? Taking resistance from higher levels from 50 to 500, and from lower levels taking support, right? And Nifty on the other hand, if you see, tried to move down, but in the second half of the week, taking a little bit of pullback and then closing higher, right? So let's talk about what is exactly happening on the daily charts, because in the weekly charts, it is looking like markets might take a little bit of breather over here, or a little bit of a pullback, right? Maybe Bank Nifty might consolidate over here, maybe Nifty might take a little bit of pullback over here. So in the daily charts, if you see, things are not looking that good, right? If you see, I mean, they are not very bad also, but they are not looking as good as weekly charts. If you see Nifty continuously moving down, taking a pullback, then again seeing a bit of a sell off. Now what I am expecting is that we might probably see a higher high being made over here, and then Nifty might take a sell off from here. Okay, so what we will do is that is very simple. Okay, now if the markets have to move, right, move down, and we'll talk about that also. If you see Bank Nifty also taking resistance exactly from 52,500. So one more thing that you need to look out for in the weekly charts is that if the markets have to move down from here, on Monday itself you'll see a very good sell off, both in Nifty also, because what happens sometimes is that we think that markets have made a hammer sort of candle. This is a reversal candle, markets will move up from here, right? But what happens is that most of the times is that when markets make a hammer candle, right, sometimes you see a follow up in the basically in the same direction. Like you will see a follow up down from here itself, right, at lower levels. So what we need to look out for is very simple. On Monday, are we seeing a very brutal sell off in the market? If from Monday onwards itself we are seeing a very good sell off in the markets, then chances are that market will most probably continue this sell off and go till our target of 23,600 on the downside. Bank Nifty also on the other hand, if you see, if Bank Nifty continues the sell off, same 50,200 will be easily achieved for Bank Nifty also. That will be the target for Bank Nifty, because by the time Nifty comes till 23,600, Bank Nifty will also come down till 50,200. Okay, so that is one thing. On Monday, if you see a brutal sell-off, then keep a sell on rise stance itself. And on an intraday basis, if you get any sort of a chance to take a selling position, go ahead and take that. Okay, so if you see over here, now Bank Nifty looks like it is going to go down to the lower level of this range and probably take some support from 50,800 first of all to 51,000, and then if it breaks this level, same next support of 50,200. Okay, so Bank Nifty looking a bit bearish over here, but Nifty on the other hand can do something which is a bit of a you can say a bit of a contradictory move. And Nifty, what it can do is that make another bullish candle over here. Okay, not such a big bullish candle, but go for another bullish move over here, back up till this breakdown level over here. Okay, and then from here Nifty might again start a sell off. Okay, so If that also has to happen, it will happen on Monday or Tuesday itself. Okay, so the first couple of days in the market in the of the week will be very important, and they will decide whether the market has to move up or move down. And you will be pretty surprised, right, that US markets were up so much, right? US markets are up so much. If you see Nasdaq, Dow Jones, S&P, all of them are up so much, right, in this last week. But why are our markets lagging? And the simple reason is FII selling. US markets up 5% this week, right? Nasdaq up 5.4%, S&P up 4.7%, and our markets are pretty much flat, right? Nifty down a little bit. The simple reason is FII selling. FIs have been continuously selling every single day since 1st October, right? And they've sold to the tune of 1,34,000 crores as of now, as of Friday. So they are continuously selling, and that is creating a continuous pressure on the markets. Why are they selling? The simple answer, first of all, was that now previously the answer was China, right? But after that China incident, now the another thing why they're selling is that they are moving their money into US. Money is flowing back into the US, because of which you are again seeing more weakness in our markets. Okay, so as of now, what can also, as I said, what can happen in the next week will be dependent on the first 1 or 2 days of the market movement. Okay, if on Monday itself you see a very brutal sell off, take a sell on rise stance itself on the market and continue to sell in on any rise that you get. Right now, what might happen over here is very simple. Okay, another thing that might happen over here is that, as I said, that Nifty might take a pullback over here and go up till 24,750 to 800, this zone over here, right? At the same time, Bank Nifty might also continue to move up and break this resistance over here, right? If you see, Bank Nifty has this resistance, so Bank Nifty might break this resistance, and then if it starts to come down, additionally, then we can see even more sell off, because then the markets will trap the buyers, a lot of buyers over here, and then the markets can see a very brutal sell off, and chances are probably Bank Nifty can then break 50,000 and move down very fast from here. Okay, so these are the two scenarios that can also happen if markets start to move up. Okay, but as I said, that first 1 or 2 days of this week will be very important to decide where the market has to move, where the market will move in the coming week. Okay, so definitely follow me on a daily basis and watch my market analysis videos. And yes, I know since the last 2 weeks I have not been posting market analysis videos, but definitely I will continue those videos from this week. I just was a bit busy, but anyways, yeah, first 1 or 2 days of the week will be very important, and then market, you can say, momentum can be decided as to where the market wants to move. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate that you guys waited till the end and you listened through the whole episode. But yeah, as I said, that was it for this week. And if you have any sort of suggestions for the podcast, if you want something changed, if you have some sort of a new idea that I should implement, please let me know in the comments. Just DM me anywhere, Instagram, LinkedIn, and even that is fine. But yeah, that was it for this week, and I will see you guys in another episode in another week. Bye bye.